Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's options trading desk here in Manhattan. And something really rare and unusual happened earlier this month in the market, and that is, as we've covered in recent videos, the fact that the VIX index, which is in essence the way that the options market measures how volatile stock prices are, the VIX index spiked above 65 earlier in the first week of August, which is a massive number. And just like we've pointed out in recent videos, this is so rare that it has only happened 4 times in the last 10 years. And so any solid full-time trader has a playbook for unique situations in the market, like a huge spike in the VIX, because they can turn into incredible opportunities that can constitute a major portion of your trading income in a given year if you're ready for it. And not only should you understand what strategies have a track record of working brilliantly in a VIX spike situation like we're going to be discussing in today's video, but it's just as important to understand what not to do, because it's very easy to fall into a trap when trying to take advantage of unusual events using options. And so the purpose of this video is to both share with you what has worked historically when the VIX spikes, and at the same time to warn you about what fails miserably. And even though on the surface it might seem like the logical trade to make. So if that sounds interesting to you, then stick around, because I think you'll be surprised at what does work and what doesn't work during a VIX spike. Now, before we get into the option strategy that we'll be teaching you in today's video, if you're absolutely brand new to options trading and you don't know much about how options work, we put together a video for you to understand options basics. So if you click the video appearing on your screen right now, it will lay the groundwork for you to understand the option strategy that we'll be sharing with you in this video. Then when you're finished, let's examine the last 4 times that the VIX spiked. And it's important to understand that essentially every time that you get a huge VIX spike like we did on August 5th, it is invariably caused by a huge, often sudden, unexpected sell-off in the market in reaction to some macro event. Let's take a look at the first of these 4 events over the last 10 years. And that was on August 24th, 2015, when the Chinese stock market had a huge sell-off overnight in reaction to a Chinese government devaluation of its currency, the yuan. And that sell-off was so violent that it caused the VIX to spike above 50 and the US market to gap down over 5%, which is a massive gap for an index. And that is that instead of buying a put, assuming the market will keep going down, might it make more sense to instead enter into a bullish trade with the assumption that after the sell-off takes place, as has always happened historically, the market will bounce, and often to new highs. And so as an alternative, let's pull up that same options chain, but this time, instead of buying a put, we're going to go out onto the call side of the options chain, and looking at that column called delta, find the option that is closest to the 70 delta call option, which in this case is the 1675 call with a delta of 69.98. And we're going to go ahead and buy one of those, and then at the exact same time head up 15% above that strike price, which in this case is the 1925 strike, and sell that one.